And we are live. It's so fun to be here with so many people today because we've an amazing discussion that we're going to be having all around angel investing, one of our favorite topics with Female Founder Collective. I'm Allie Wyatt. I'm the co-founder and CEO of Female Founder Collective. Reminder, we also have the 10th house, which is our private membership community where you can get super served with all these incredible resources, as well as the North, which is our expert marketplace to book one-on-one sessions with incredible advisors. And of course, today we are going to be talking about how to get more involved in female founders' businesses through community investing. And this is actually part of a very successful series that we've been doing with a partner, Sidecar, that I became obsessed with after learning about it through Annie Evans, who is going to be speaking today. It's an incredible platform too that I've used as an angel investor. So I can very much give it a thumbs up and say that it's wonderful. It's founder friendly as well as investor friendly. But I wanted to bump it over to Hallie Kaplan-Allen. She is the CRO of Sidecar, for her to quickly talk about what they do before we get into this discussion.
Thank you, Allie. I'm very excited to be here with so many people that I love from different walks of life, but that we all are really excited, like Allie said, about having this conversation. Sidecar specifically is super excited to be partnering with FFC again to reach your incredible community of founders, entrepreneurs, investors. I've always found this community to be an amazing place to have really open and honest conversations about tricky topics. And so certainly one of those with angel investing can be super intimidating, but we're excited to be part of it. And for those who don't know, as Ali kind of alluded to, Sidecar is a platform that makes it easier for founders and funders to raise money for their ventures. So we work with emerging fund managers, angel groups, syndicates, and founders to streamline the fundraising process through SPVs and venture funds. And like I said, super excited to be here. So thanks for having me.
Amazing. Thank you, Hallie. I'm going to go ahead and introduce our three lovely panelists who are all very illustrious angel investors who I have tremendous respect for. I think as far as angel investors go, they are the ones to look to say they do it well, they do it smart. They're on cap tables where the founders feel like the luckiest humans alive because they are, because these women are also contributing to their business on an everyday basis to help them grow and scale. And they have programs to do so, and they've led a number of SPVs as well. So super excited to have you all. I'm going to quickly go through your bios so that everybody has a little bit of context. Annie Evans is the founder of Dream Ventures, investing in the most promising founders making a positive impact in the world. She has over 25 portfolio companies in women's health, Web3, femtech, fintech, and CPG, all with a sustainability focus. Rochelle Stewart has successfully curated and cultivated communities for diverse investors. An entrepreneur is the founding partner of the Syndicate and as director of early stage startups at Silicon Valley Bank, where she led ecosystem partnerships and founder support. She's an investor with in more than 20 startups and is passionate about investing in and supporting underrepresented founders. And last but certainly not least, we have Kelly Arena. From a professional football franchise to corporate finance to investment banking, Kelly has always worked in finance and knows the inequalities that exist, both in past knowledge, opportunities, and checks written. Kelly founded Golden Hour Ventures to empower women, both as founders and investors, to create the roadmap to their success. And at the end of the day, Kelly's goal is to make women rich. Love it. Snap, snap, clap, clap on that. I'm going to ask questions for you all. I'm going to start with you, Rochelle, on your personal investor journey. So how did you become an investor? I think there's a lot of women or men too that are participating in this and just wondering, how do I even get into this? It's a very intimidating thing to be an angel investor. And sometimes people feel too overwhelmed to even start.
Yeah, what to do to start. So I'll start. Thank you for the intro. Thank you for having me. Love to be here. And with these esteemed, I wouldn't call myself an illustrious angel yet. No exits, so still waiting for that true illustrious title. But very very kind of you.
Takes a long time though.
Exactly. So I always like to say that, the best, an angel investor can only be, as good as the deal flow they're seeing. And so for me, I started my career on Wall Street. And so if you ask me if I could have fast forwarded from my early days, I started in 2005, right before yet another crisis. And at that time, I didn't even know what venture capital was. I worked in financial services. So on the surface, you might think, oh, well, you became an investor because you were in finance and it made sense. But that actually wasn't the case. I actually became interested in it, and my journey started when I was in media. I was at Condé Nast, and Vanity Fair published an article that was titled, the 26 Black women who raised over $1 million. And at the time, I was doing digital strategy and working with the brand. So I was always reading the content. And when I read it, it just kind of struck me that, number one, that's, such a low number, 26. And that I felt like, someone who had been in financial services, this asset class was just so new to me. And I didn't understand like anything about it. So I started this explorative journey to see, how do I make a difference? In the spirit of my purpose and trying to find my purpose, I said, well, if this is the number, there has to be opportunities for change and for impact. And in doing the research, I realized, and even in talking to a lot of my peers and friends, that none of my friends were angel investors, and that I was not alone in sort of thinking this is an area that I know nothing about. And this was back in 2018. So I started by having this concept that the best way to do it is with others. And I did that before even thinking about it as a community strategy or community building, because it was so obvious to me that if you're going to do it, and it's so, when you want to do something and it feels scary and you're not sure, get smart on it. So I did a lot of research, start doing it yourself. So I started investing myself, and then bring others along with you. And that's kind of how I started that journey. And from there, I made mistakes along the way, and happy to talk about that over this discussion. But also had a lot of fun, and then met a lot of awesome women, because that is my passion. It's getting more women into investing, just generally, not just in venture, but generally. And I think angel investing is a way that, because there is so much sort of halo around it, this idea of startups and innovation and opportunities to give back, I just think it's a great way to spend both your time and your, I guess, discretionary income, if you will, if that's what you choose. So I'm really love this space, and I'm excited to be here to talk more about it.
Awesome. And I want to ask both Kelly and Annie this as well, but did you feel like there was a big learning curve in jumping into it?
Annie, you go first.
I'm like, yeah, someone else should speak.
Looking back, yes, at the time I was just so green that, I didn't know it was a learning curve. But Allie, I don't, like, you were one of my biggest inspirations for angel investing. I mean, you've been in this game, since 2015? When did you start? 2015,
2014. So I haven't yet had an exit, but my 10-year time horizon is coming up.
And you're 4 years ahead of me. So
I literally remember I had like a legit business girl crush on your portfolio, because it was all like my favorite brands. It was like Hatch, Somersault, Forward Space, like all the cool buzzy consumer brands. And you were like a huge inspiration for me. And I was always like an aspiring angel investor. And so I learned a ton from you.
Well, thank you. And how did you ultimately start doing it? Like, what was that sort of thing where you pulled the trigger, you said, I'm going to make my first investment? How big was the check? I think that's oftentimes a really big misconception too, is that, you're sitting there writing $1 million check or something.
So
I remember it like it was yesterday. It was, I was helping iFund women raise $2 million, and I was helping connect them with angel investors. Never thought of myself as one. I was just the connector. And then I got so excited about the company. And even though I was an advisor, I thought, I want to put in $10,000 into this round. And I remember my husband trying to talk me out of it, because he said I should save the money for, I was about to have a baby, my first baby. He said you should save it for a rainy day or, emergency. and you already have advisor shares. So why are you going to invest as an angel? And I thought to myself, I believe in this company so much. I want a seat at the investor table. I want to like learn from all these amazing women. I mean, gosh, that cap table is like Amy Griffin, Sally Krawcheck, Rochelle Stewart, Allie Wyatt, like crazy. And it was the best thing I ever did. So that was the first one.
And Annie, I don't think I ever knew that was your first. That was also my very first check. And I actually found Karen separately because I was actually consulting with Lisa Blau, who heads up Able Partners. And she did this big event at the Wing where female founders got to pitch to an all-female investor audience. Now, at the time, I was just in the room because I was consulting with her, but I wasn't thinking like this is the time for me to pounce into angel investing. So my journey was more like, let me just learn, let me get to know more founders, let me do stuff for founders. And then eventually I made the leap into investing, because I do think, to your point, Annie, there is something about like being in the mix and just in the ecosystem, meeting folks. And then it starts to feel like the natural thing to do, especially if you want to put your money where your mouth is. It's like, great, I could just do a lot of support, but the best support is writing a check. And so for the same reason, that was why I chose to also invest in iFund Women. And it definitely was scary. And it was certainly not the same way I invested there, which was like, I like Karen, I saw her pitch, let me invest, to where I look now. There's a little bit more diligence, but yeah, it was definitely like baby steps into taking the leap, but no turning back.
And Kelly, what about you? How did you get into angel investing?
My very, very, very first angel check was in the pre-seed round of Within, which is an acupuncture studio in Manhattan. And it's so full circle because Annie and I just co-led their Series A SPV that's, has this big, incredible cap table. And I owe Michelle for so much. And for me, it was a founder first investment. I was an investment banking analyst with her. So I just like believed in her so much that I just wanted to be supportive. And then from there, kind of watched her fundraising journey. And she was one of the founders that I saw like really pound pavement and work her network, and realizing that so many of the folks on her cap table were all of these people I admired. The founders of Sweetgreen, the founders of SoulCycle, Gwyneth Paltrow. And I was like, oh, all of these smart people that are doing big things are also angel investing. And it seems so inaccessible to me. And obviously it was accessible because there was a friends and family round. But that was the first time I got curious about like, oh, is this something that I could actually do? And I had a finance background, but venture capital is its own world that tends to be kind of shrouded and in jargon and mystery. So if it wasn't for like that kind of handhold in the beginning, I don't know if I would have been on this path. So it's, part of the reason why I love to make that entry point seem a little less scary and reduce the friction there.
I love that you all, because I didn't do this, and word to the wise, don't start off with your first check and somebody you have zero background on, which is what I did. I made money. I actually did. That was my one exit, but it was beginner's luck. But I highly recommend not working with a founder that you don't know previously as your first check. But I love, Kelly, that you said you knew her, you went to business school with her, you knew her work ethic, and you knew her personal ethics and morals, and sort of how she conducted herself. So that right there is very helpful from a risk assessment perspective, especially in such an early stage. So I love that. Annie, I have a question for you, because I think a lot of people probably wonder about what are the pros and cons of becoming an angel investor, one, versus a partner at a venture capital firm, right? Like you have gone deeper on sort of the angel side versus starting your own venture capital firm. And that's a question for both angel investors as well as founders, right? What is the difference in working with angel investors versus VC investors as a founder?
So for me, this answer is really simple. And I say this all the time. It's just, I feel like I have a lot of fun and I have a lot of joy in what I do. And I can just do deal by deal what I think is like exciting. And a lot of people that have funds, it just seems like a slog. You're trying to always just raise from LPs, and then you're always having to answer to all of your LPs on what you use to invest their funds in, right? So for this, it's like, if I'm excited, I can either invest directly or I can do an SPV for anyone who's interested. And it's just a lot more fun for me this way than having to like raise LP money, $250,000, and then constantly be doing all these reports and trying to show them, that their money is, being put to good use. So that's just my approach for now, but we'll see what
So
happens.
it's kind of like time spent. The time that you are spending, you can spend solely on these deals as well as the companies
Yep.
versus having to spend a large majority of your time on LP management.
Exactly.
Got it. And then what about on the other side? So as a founder, what do you think is the difference in working with an angel or for sort of their expectations of working with an angel versus a VC? And feel free, Rochelle and Kelly, to jump in on this if you want.
Yeah, I would just say that working with one angel is like working with one angel. Like every angel kind of brings their life experience to the table in a really different way. I think that working with VCs, obviously, there's a ton of different VCs in the way they approach. But there's a little bit of standardization there, right? In the way they have to report the KPIs that they have. They're expected to provide venture style returns. And so that is like a pressure that they have. Angels don't have this admin to their investing mindset. So they kind of want to come in with a different lens. And that's the beauty of working with angels, is that, you can form this community around you of folks that come from all different walks of life. A venture capitalist is going to have those KPIs. If you have people on your cap table that might be attorneys and they're just kind of doing this on the side, they can, bring you free legal advice and be like, oh, I don't know, I would like double check that. If you have marketers, people who love creating content, if you have people with like connections in the retail distribution that you need, there's so much value to having a really diverse set of investors. So obviously I'm biased, but I think the value of community and working with an angel is beautiful. And I do think, every angel is a little bit different in how involved they can be or how involved they want to be. But if you're departing with your personal capital, usually you want to be in the mix and seeing what kind of impact you can provide in order to get ROI for your investment, as well as to support a brand that you believe in.
And do you find that there are different benchmarks? Like you talked a little bit about KPIs and specifically the things that investors that are VC investors have to bring back to their LPs. So or specifically that they have for their fund, right? So can you give some examples, and this can be any of you, or maybe Kelly, since you were talking about it, of benchmarks that you've seen from VC investors versus an angel investor?
Yeah, sure. I mean, I think, venture is going to be return first. So their LPs are expecting venture style returns in a timely manner. So they have investment horizons. I also think it's one of the reasons why like pre-seed and seed has kind of fallen out of favor in venture funds, because that investment horizon is long. Like you just talked about, like, our investment horizon. And I think Annie, am I right too that you haven't had your first exit?
No, I haven't had any yet. I started in 2019 though, so that's kind of on par with statistics, but
exactly. And neither have I. And my first check was in 2018, and like, I'm cool. I'm not mad about that at all. Like I knew when I started that investment horizon is long, and I really enjoy that journey. But I think, venture funds, there's a timeliness to the ROI that, that is pressing and it's on their mind and they're having to report to their LPs. I think as far as like KPIs for an angel is like highly individual. And I can tell you that so much of the ROI I've gotten hasn't been in terms of finances, because I haven't had an exit yet. I'm still early on my journey. But the network that I have built throughout this journey, I'm so close to inspiration like every single day. And the founders I work with are just ballers and rock stars. And I think that's the best part about being an angel, is having this like killer community. And it makes me want to work really hard on behalf of my founders, because I see how hard they're working for us and for themselves and for their dream. And it's really motivating.
Yeah, I would definitely agree with that. Nobody works harder than these early stage founders trying to make it. Rochelle, question for you on the brass tacks of becoming an angel.
Mm-hmm.
Are there any sort of regulations that you could speak to, or qualifications of an angel? Like, how do you know I can become an angel?
Are you destined to be an angel? Well, before I answer that, I also want to add a point to the question around VCs versus angels, if that's
Yeah,
okay. Just
absolutely.
I would say, like, not all VCs are created equal, in that for any founder who's trying to think about, oh, there are some VCs that operate like more like angels than others, either because of the fund size, which dictates the strategy and their approach and their resources. So they, solo GPs like Charles Hudson, he actually just wrote an article about it that I'd recommend any founder read, because it helps you to understand fund math and what it means when it says venture size returns, 3x, 10x, all of these IRR. A lot of that might sound like, another language, but I do think it's important to kind of internalize that. Like, as I'm taking this investor's money, what are they expecting in return? And there's a financial component, but then there's also the, like, what do I expect from them? Let's share out that. Yeah. That's really a good one. And so I would say that is a piece where you'll see some VCs that operate more like angels and are rolling up their sleeves to really support. And I always tell founders, like, even if you're raising institutional capital, you should still have angels on the cap table, even if you're not at the early stage. I met a bunch of like seed or Series A founders who literally have no strategic angels, and they didn't realize how valuable it could be. And then they think, well, now I can, but I'm at a growth stage, so it's just going to look different, trying to get angels at that stage. So just something to think about.
And talk a little bit more about that. Like, what do you see as the benefit of strategic angels? Because I also tell founders, I'm like, make sure, even if it's small, reserve a little bit for angels, because I think they're really important to the ecosystem. But
Yeah.
I'd love to hear your reasoning for that.
Yeah, I think that, like the theme of this around just community investing, effectively, you're building your cap table is your board of advisors before you can even have a board of advisors, right? So before you get to that Series A, Series B, where you're adding an independent board member, you actually have an opportunity to build a board of advisors from strategic angels who can be there and be supportive. And in more cases than not, you will know whether or not you're going to get out of them what they claim, right? Either because of the reputation, because they were referred from a founder, right? Like, anyone who's writing the check at 5K, 10K, 15K, or, raising an SPV, they're telling you, this is what I can do for you. So I think it's almost, it's like you have so much choice. And I think founders often think, I don't know any angels. It only really takes like knowing a few, and you unlock this huge community, I think, and this huge opportunity for support that you just aren't likely to get from friends and family who are just going to write you the check because they're friends and family, or the institutional investor that comes in later, because most institutionals don't really provide that type of support, even if they say it's a part of what they provide. Most founders would say, my angels are, low size checks, but high impact, or small checks, high impact. And with an institutional, it just looks very different. So that's
and
what
I
I
want
would
to go into sourcing angels in just a second. Annie, I'm going to throw that question at you, because I think there's no one better at it. But I want to ask you, going back to sort of the regulations and the qualifications, how do you know if you're qualified?
Me or Annie? Sorry, I missed that.
You, Rochelle.
Okay. So there are regulatory rules around this, i.e. accredited investor, which basically there's income stipulations. There's, qualifiers if you don't have the income, which I think is like 200 or 250K a year or something joint. You should look it up to get the exact number. But this is all on the Angel Capital Association. If you're looking at the ACA, it's going to give you literally what is the latest in terms of what it takes to qualify. But I think the regulatory piece can kind of be circumvented if you look at other ways to write checks, even if you're not writing it in the same way. So like if you invest on Republic and crowdfunding, like there's ways to sort of invest and write super small checks that because of Small Business Act and other regulation, you can actually still have that same action of writing and investing, even though you're not doing it as an accredited investor. So that's just something to consider. Like this whole idea of democratizing access and allowing people to sort of participate in the innovation economy and build, and expanding that network of who can participate, I think has really evolved over the last few years. There's the rules, and then there's the should you do it, and what does a good angel investor look
That's
like?
what I was going to say too.
If anyone can be accredited based on the law, I guess. But I think, if what would you want? What would a founder say about the very best angels and why? I think, being able to say, I'm not writing the check because I want to run the company. Like, I'm going to sit back and just be supportive. I'm not going to try to write, a diatribe and a whole strategy deck, tell them what to do. I mean, I've heard a lot of horror stories from founders who are like, I regret having this angel because they're overbearing and they're asking too many questions and they wrote a 5K check and they want to know the performance, right? It's kind of like do a little bit of self-reflection and take personal inventory of how truly risk averse you are and what that might mean for the mindset you have once you've written a check that might go to zero. Like if you ask yourself that question, how might I behave? Is that going to make me nervous, anxious? Is that, I have founders in my portfolio who are on the brink of maybe being a zero. And but I'm still reaching out to support them, right? Like, cause I think there's something about just beyond what can you write? It's being able to accept what that journey looks like and just ask yourself those questions before you start to go on that journey of building your portfolio. And in addition to sort of taking a back seat and saying, am I willing to just sort of be the support that the founder needs? I think the other piece is, am I willing to, am I going to deliver on what I say I can deliver on, right? If I'm going to make fundraising connections for them, can I deliver on that? And knowing what you want, it's almost like a personal brand exercise, right? What are the things I can deliver on? Because that's going to be the best way to grow your network with other founders and with other investors. So yeah, that's what I would say.
All right, Annie, flipping over to you, the question about, so let's talk about a cap table. First of all, can you define what a cap table is for those people who are on this and don't know what a cap table is? And then can you talk about sourcing? How do you find angel investors and how do angel investors source deals?
Absolutely. So a cap table is outlined exactly who's invested. So for example, it could be if you have a VC, you have their name on it. And then if you have angel investors, their names are listed on it if they go direct. If you happen to do an SPV, that would be the name of that syndicate as an entity with all of those angels within.
And what's a syndicate, Annie?
So a syndicate is also an SPV. It's the same thing, special purpose vehicle, and is a way for a group of smaller investors to do smaller checks that all go into one entity. And then again, it's a way to keep your cap table really clean because it's not a bunch of small checks on a cap table. And it's also a great way, if you want to start angel investing, you can start for as little as $2,500 checks and grow a portfolio that way.
But not for all syndicates, right? So it's going to sort of depend on which syndicate you're investing in as part of, right?
Yes. So that's a good point. So every syndicate will have a minimum size check and they totally vary. So some syndicate leads will be okay with letting people in for a $2,500 check. And some will say it could be because it's a later stage company that it's more of like a 10K minimum.
And then Annie, how do people find you and Kelly? And then similarly, how do you start to find companies you can invest in if you're an angel? And then if you're a founder, how do you source the best angels for your cap table and for your business?
Well, number one thing I would do is join communities like this. I mean, this is a great way. Obviously, all of these folks, are members, but I think this is why what you've built so incredible, because it's a great way to have access to angel investors and people to meet that way. That's why it's so important. I'll give just 2 examples of how I personally went about it myself. So I was a founder. I had to raise a seed round, had no angel investor network in 2012, did not know one angel investor. And where I found my angels was I pulled my super users from, I had a beauty booking app. And so I pulled who my super users were and I looked them up on LinkedIn and I stalked them, I have to say. And if they were, a VP at Warby Parker, a CMO at Gap, global head of marketing of Unilever, I would reach out and say, thank you very much for being a customer. I would look at where they lived. Oh, you live in Tribeca. Do you want to meet for a tea at the Greenwich Hotel? Oh, you live in the West Village. Let's meet by the fire at the Marlton Hotel and have like a little hot toddy and make it so easy for them to say yes. And I just built relationships that way. So where I got all 10 of my angel investors, they were my customers, and it was a lot easier of a pitch because I was already solving a problem for them. I was helping them get a blowout faster. I mean, that is a huge pain point that needs to be solved,
Yeah.
And then from the perspective of how I started helping founders like Karen from iFund Women to raise the 2 million was literally, when I think about years ago where I met all my angel investors like you, Allie, was hey mama. Like
Yeah.
I met you, I met Fran Hauser, Hitha, Rebecca Minkoff. Like I knew about 10 people. And then where my angel investor network has grown now to 500 angels, give and take, is by investing as an angel and then meeting all the people on the cap table. So when I invested in iFund Women, now I met those 40 people and got to know all of them. And now I have 25 companies. Let's say there's 20 to 25 angels on the cap table. That's how I've grown my network. That's 500 right there.
Amazing. And then Kelly, for you, what can you expect if you are getting a check from an angel investor? Like what, from a founder perspective, is fair to expect? And then from an angel investor standpoint, as Rochelle was talking about, sometimes it's going to be a big commitment. Are you ready to be there on that journey with them? What do you think is also incumbent upon the angel investor to understand that they're going to need to do as part of investing in this company?
Yeah, I'll start from the angel perspective. I think when you are investing as an angel, it's really important to check your ego. If you are in it to get rich, I don't think this is the path for you, right? It's like a lot of rich people are angel investors, but it's not necessarily the reason why you want to be an angel investor. Obviously, we all want return because we want our founders to make it. But I think, again, the ROI, if you're thinking like, how can I add value? How can I be impactful? You'll find yourself really basking in the rewards of being an angel investor. So I would say, don't come in with like, well, I gave you my $5,000, so this is what you owe me. As opposed to, okay, I'm invested. I've got skin in this game. Like, what can I do to help grow this company? How can I support this founder that I clearly believe in? What I'm not going to do, the don'ts, I'm not going to be like, hey, can you send me like all of this free product all of the time? Super fair to be like, hey, I have a bunch of communities I'm involved in and I want to like hype your product. Do you have like a little promo code I can use to kind of like send it out to my network and gift it to every single person I know for Christmas? Just kind of knowing that you're not there to take, you're there to add value is a great way to start. And I think from a founder perspective, that's what you want to look for in your community of angels. One, do they have an expertise that you can lean on? Two, pardon my language, is there a vibe? Like we are women and we have this beautiful thing called intuition. And I would say that both as an angel, as a founder, lean into that. Like, when you're with a founder and you're like, yes, I want to be a part of what they're building. Whether this company fails or not, I want to be a part of this journey. This is the kind of company that I want to exist. And I want these kind of companies to be around in 18 months when the venture rounds start coming, when the bigger institutional capital starts coming. I want to get them to that place because this is a company I believe in. That's what drives a lot of my investment decisions personally as an angel. It's just like, well, what kind of impact do I want to make on the world? And, I think there's a lot of different ways to be impactful, and we really underestimate the power of for-profit companies built by women or underrepresented founders that can really just change the landscape of our future. Like, we live in a capitalistic society. The more rich women we have, the more company owners we have, the more our policy starts to look different, the more capital flows into like the different ways where change actually happens. So it's a little bit of a tangent, so apologies for that. This is obviously something I really care about, but I would just say be impact-minded first, either globally or from a micro perspective. That's what you should be doing as an angel, in my opinion. And as a founder, I would be weeding for those type of angels specifically, because I think that's when like the magic happens.
And Rochelle, questions for you around due diligence, right? So as you've decided, I want to write my first angel check, how do I know if this is a good investment from an angel perspective? What are some questions they should ask? What amount of diligence should angels expect to do? And ask of founders. And on the flip side, how should founders prepare for angel investors versus a VC investor?
Yeah, I love this question because I think, I didn't talk a lot about my syndicate and how it's structured, but the way I structured it was actually done intentionally to address what I saw as a common pain point, especially with female angels, which is not knowing how to diligence which translates to leaning into the risk aversion. I have a lot of questions to ask. I need more time. I'm not ready to make the decision. And then at that point, it's like, the founder may not be giving you the feedback that this is not a great experience, but it isn't the best experience, right? Like, as a founder raising capital, no matter whether the check's 5K or $1 million, like, you want to get to the decision as quickly as possible so that you can, get back to sort of building your business. And I think, as angels, particularly, when you think about, the emotional quotient for women of like, how do I think about this decision and how do I get to conviction quickly? I think that's the piece of it that we can often get in our own way. And this goes on the other side, right? I say to sometimes, founders can often, I don't want to make the ask, like thinking smaller or feeling smaller in the room than you should. And I think that same idea of what could be holding, women back on the investor side still holds. So with the syndicate, we are structured as a community and co-invest together in structured vehicles, which is like an SPV, but it's not deal by deal. It's like one kind of collective pooled capital, so that it actually allowed me as the syndicate lead to move quickly, to invest quickly in multiple deals. So the idea was, how do you get a new angel to build a diversified portfolio in 10 to 20 companies quickly, and give them the hope that of those 10 to 20, when they're on that 10-year journey, that they hopefully will get some return out of it, not just the financial, but a diverse set of experiences, working with different founders, investing in industries, et cetera. So, I think that's been kind of, the joy of it. And what was the original question? I know I started to kind of give a story around it. What was the original question?
The original question was really just what kind of diligence should angels be doing to understand whether or not this is a sound investment for them?
Right.
And then on the flip side, what should founders be providing for angels
to be prepared? Thank you for that refresh. So with that, the pooling of investors, I think, should happen, even if it's not with a syndicate. Just this idea that I don't have to make the decision alone. I'm not an expert in everything. I don't know everything. So again, saying, I had intentionality around the syndicate, it was to bring together like-minded women who wanted to invest, even if they'd never written a check, but they all had expertise in different fields, marketing, healthcare, maybe founders, using your community to give you insight. So you may not know all the questions. I do believe that there is like, every angel should go through the exercise of what I said before. What's my risk appetite? Secondly, where do I want to invest? It's almost like, no matter how small your portfolio is, the best way to get to what diligence looks like for you is to actually build an investment strategy. And that doesn't have to be like a slide deck. It could literally be a Google Doc where you're like, here's what I want to invest in and why, here's how much, here's the check size I'm writing. And then when I start to diligence, what are the things that I care to learn? Do I care about impact? Do I care about, the founder's experience in X? And I think that's a personal exercise, and it can run the gamut from, sometimes I'm asking for the financial model, and I think a lot of founders should have some semblance of a financial model, because some investors will ask and others won't. A full
Do you
data
think
room,
that
no,
it is
but
incumbent on founders to give an angel
yeah,
their financial model? It's something that I tend to ask for as
yeah,
well,
yeah,
because I wanna dig into that and really understand that their assumptions are sound and that it's realistic.
right,
But I don't think a lot of angels ask for it, and I do think sort of akin to that conversation around it's a 5K check.
yeah.
You're like, is it fair if you're giving 5K versus, 100K to ask for the financials and really get that deep?
Well, I think that's also the benefit of the SPV. And you ladies have run more than I, but I think when you have someone who's the liaison, it makes it a lot easier. So it's kind of like you got to read the room. And I think that matters, right? If someone is giving you an opportunity to be, there's already an institutional investor and they're saying, hey, we want some strategic angels on the cap table. We're making a decision in 2 weeks. That's not the time to ask for a model. But, like you actually have to have a different decision framework for different types of instances for when you might have opportunities to invest. And I feel like if you know that there's a longer lead time, they don't have other angels on the cap table, then you have a little more room to ask more questions, dig in a little deeply, roll up your sleeves, because they really are just getting started and you're starting that journey with them. Versus, hey, Andy sent me a deal and she's like, hey, I'm investing. Do you want to co-invest? Like, I really love the founder. Here's some bullet points. In that instance, depending on what she shares with me, that validation and her diligence might be enough, or I might want to roll up my sleeves I mean, it's kind of, saying case by case is probably not the best answer, but I actually, as much as I've tried to, like, I've created scorecards and like all these things, and I've never been consistent because the deal flow just comes at you so many different ways that it's almost kind of impossible to be. But if I had to say foundationally, I still go back to like, do have that personal inventory with yourself and like create a brief that allows you to through how you want to approach it as an investor, and get people like Annie, Kelly, Allie to give you feedback.
Annie, this one's for you. On that note, when I am putting together a deck as a founder or I'm looking for a deck as an angel investor, I would love to understand what are the key ingredients. Like when you're sending along that deal memo from Dream Ventures and Golden Hour Ventures, what does that include?
Absolutely. Well, Kelly actually is the queen of this. So she has this brilliance. When we're thinking about doing an SPV, or even she's thinking about angel investing, you call it like a deal memo questionnaire where you send it to the founder and they fill it. What do you call it?
Yeah, it's just my diligence questionnaire, which I'm happy to send to anyone who reaches out, by the way. And it's kind of just my framework for how I think about a deal. And I try to keep it really founder friendly, particularly based on their stage. Like if you're a pre-seed, then I'm not going to like hammer you on your business model, but it's a framework that at least helps me like organize my thoughts.
Can you talk about what the ingredients are to that framework?
Yeah, sure. Always, I want founder bios and to understand like why they're the right person for the team, and especially early stage. I think it's founder first, founder first, founder first. Why is this the kind of founder that I want to like hitch my wagon to? If you're again, it's so industry specific, but I would say if we'll talk consumer. If you're in consumer space, I want to understand your unit economics. I want to understand like what your margins are like, if you've got plans to improve those margins, and if there's economy of scales available. I think particularly right now too, I care a lot about customer acquisition. It's such a hazy time and customer acquisition is so expensive. So I'm really looking to founders that have a unique point of view on how they're going to acquire customers. Right now, I'm like really interested in founders who are community first. I think that, sometimes being super hyper product focused isn't the way right now in this moment in time. Like you can have a great product, but if you're just kind of like shouting about it into a void, are you also an amazing community builder? And then from that, I have like, legal framework. I want to understand like, how many people you have under contract, I want to understand how you're thinking about scaling. I have like a couple yes, no questions just to make sure there's like no super duper legal red flags that are going to like spook me. But yeah, I want to know about your margins, your unit economics, your plans to scale, how you're going to acquire customers, what you need, like what your asks are. And yeah, there's some more like nitty gritty things, but that's the gist, particularly pre-seed. It's really like, what's the founder, what's the product, and like, what's your vision and how are we going to get there?
And then what about just angel deal terms, right? It's the amount that you're raising, it is the cap. Can one of you jump on and talk to just the basics of what angels will be looking at to assess a deal?
Yeah, happy to. So as far as deal terms go, again, how they're set is going to be really specific deal to deal. I do love as early angel being the kind of angel that's, last money in. I think it gives a lot of comfort to an early angel when there's a VC lead and you can kind of look at their diligence, or if there's a lead of any sort and you can kind of, like, oh, why does this VC believe in this? And you can kind of like, understand what their questionnaire is. You can look at their deal memo and they're setting the terms and they have so many reps in this space that it gives you like a sense of trustworthiness that, okay, I guess that valuation is legit. I guess that discount seems fair. So that's a nice space to be as an early angel. Just like, don't be afraid to piggyback. And I think, we love to lean our community and like crowdsource opinions for a lot of things. So, like being with the syndicate, with Dream Ventures is a great way to kind of just like build consensus around what you're thinking. But, as far as terms, that's usually, decided between the founder and their investors, both VCs and angels. And it's kind of like a consensus building mechanism.
And then as far as it goes for, my question was going to be around the deal terms and then starting to build a syndicate. And what somebody in the audience actually asked about, what is the first step? Do you need a syndicate lead? And I'm going to ask this one to you, Rochelle. Do you need a syndicate lead, or how does a founder even go about raising? And then can you do what's sort of the advantage of doing a direct check versus joining a syndicate?
Yeah, in the experience I've had, the syndicate is often done to unlock additional angels at a lower check size. Because as much as we want to, democratize access and founders want to have strategic angels, they don't want, what you don't want is to have a messy cap table, which literally by messy, that doesn't mean like you have weird terms. It can mean you literally have 100 people on your cap table who you now have to figure out how to legally get signatures with. And for your next round, and it's something that I think maybe isn't talked about as much as like what happens today, even when you're raising your first dollar, can impact, your ability to raise later on. And your cap table being clean, as Annie pointed out, is a big piece of that. So being able to get more investors on the cap table without adding a complexity to the cap table will save time. It's more efficient. And then I think you do get to scale that founder support in a way that you wouldn't if you were getting, it's a one-to-many. So it's kind of like a network effect that you're creating on your cap table that wouldn't exist, if you just had one person on there. I don't know, Annie, Kelly, do you guys want to add? Because all of my SPVs are through the syndicate. So it's the same group of people every time versus, having like an open-ended syndicate. So I just wanted to clarify that in terms of the difference between what I'm doing and what Dream and Golden Hour are doing.
I would just add that, I think the standard, and you guys, I don't know if you've seen this, but is usually around 25K minimum. Direct to cap is kind of the average check size.
And it probably depends on how much you're raising, right? So if you're raising 200K, then maybe you might be open to like 10K checks or 5K checks.
Yes. But again, you don't want to take a lot of those direct because then your cap table is going to be messy. So kind of seeing 25K. So in terms of like, if for anyone that's listening, that I think that's why we're all here is like, thinking about starting to angel invest, you could either do, 5 deals at 5K each and have a portfolio of 5 companies that you can nurture and learn and add value and roll up your sleeves and have impact, or you could, put all your eggs in one basket and do one check and then kind of roll the dice that way. So I've kind of gone the syndicate route so that I could have a portfolio of 25 companies to like nurture and grow and learn and all of that stuff. And then I would say in regards to going direct versus SPV. So if you go direct, your name is on the cap table and you don't pay any of the SPV fees, which standard is 20% carry, 2% management fee for the SPV lead. That's kind of the standard. And then the platform, like Sidecar, they have their fees because they have to obviously cover setting up the entity, doing the taxes and all of that stuff.
Got it. That's super helpful too, because people don't think about the cost of those different pieces. And I think oftentimes it's just assumed that it's free, but it's not. And the reason is because there's a lot that goes into ensuring that you're set up for that. I want to talk about also safes versus and whether or not they're safe for or smart for angels. Rebecca actually asked this. And I think this is a great question. Are there particular deal terms or a convertible note versus a safe versus what kinds of vehicles do you think are good for angels to start with?
Yeah, I'll jump in. I think, again, this is going to be highly individual. And I have noticed a little bit of like a changing of the guard, just even since I started my angel investing journey, where the convertible note was king at first. And now it's the safe. I love a safe. I think they're very founder friendly. And again, the kind of angel I am is one that wants to be really supportive of founders. I think it makes it very easy, particularly when your first price round comes, in order to like convert your current shareholders to preferred stock. So I love a safe. It's clean, it's simple. There's a valuation cap that, provides some protection. You can offer a discount for your early money in. I love incentivizing early angels with a discount. I think it's good form, but it's not necessarily repellent otherwise. But I would love your take, ladies. I'm a huge fan of the safe. I'm glad it was invented, like thanks Y Combinator. And I think anything that makes it easy for founders to access their network is okay by me.
Yeah.
Well, so Candace asked about the formula for calculating equity on an angel receives from the company and for which they're investing. That's where it gets challenging, right? If you don't have a priced round, which early rounds, so anything before Series A typically, not always by any means, but a lot of times is not priced. And so you don't actually have equity in the company if it is not priced. You have an option for future equity. And basically a convertible note is debt. So the nice part about a convertible note is it makes it a lot more clear cut for an angel on how much equity they're going to have the opportunity to get in the company in the future. And so I think that's probably where you might have some pushback. And right now it's really it's an investor's market. It used to be a founder's market. So you're going to see, I think, a lot more swing now away from the safes towards a convertible note, and also pressure for founders to do priced rounds earlier than they might want to, just so there's that transparency and understanding from investors of exactly how much equity am I getting in a company. That's my take, but I don't know if you all have.
Yeah, I think it's a great take. And the answer is that, and by the way, like to define it, the SAFE is, it stands for a simple agreement for future equity. And it's essentially exactly that, how you defined it, Allie, perfectly, which is an option for equity in the future when your first priced round is raised. But yeah, I think again, like this is so much consensus building, right? There has to be, and it moves along with the market, like just as the stock market moves up and down, like within the private markets, there's trends change based on risk aversity and how investors are feeling. I love any notes that anything that makes it easier for founders, particularly because I'm working with women and underrepresented founders, that makes it easy for them to access their network. And doesn't have like maturity dates and interest rates that are like tough to calculate at the time of conversion of price notes. I'm a fan, but like you'll definitely see demands from different investors, and you have to decide if you're a founder, like what's the best route for you.
The other question I would ask is, in terms of the community SPV process, and Annie, maybe this is for you. What can angels expect, right, from the syndicate lead, somebody like yourself, and what on the flip side can founders expect from the process?
So our kind of special sauce and what we love doing is what Rochelle mentioned as well, is this community investing. And I know, Allie, you've experienced it by, for example, recently we hosted an event at Camilla Marcus's home. She served her amazing product, Westbourne. We had 35 investors come and actually get to like meet her, like taste her amazing food and join the syndicate. And then once we closed, we hosted a post-close celebration that Allie hosted, where all of the investors came. We had everyone go around and introduce themselves and share an ask. We helped somebody get an OBGYN. We helped somebody, find a new hire. We might have set somebody else on a date. And so we try to create these communities within these syndicates. And the founder, Camilla, said, I feel like I have this village of invested backers with me on this journey, which just feels so good that she can leverage and help have these. She shared what her top 3 goals were for that quarter. And she had this think tank around her at this beautiful lunch that Allie hosted, where we were all saying, oh, I can help you with that, or let me, get back to you on that. So that's sort of one part of our process that we do.
It's amazing, but I also think that that's unique to the special sauce of Green Ventures. And
it is. I was thinking like only have the most fun and the best events. It's like, wait, what, is there investing going on here? This is like fun. No, but you do have the best events and a great community.
All of you, we're all part of this.
What I also think is important to note is you all send such helpful information for the investor, right? And I think that that's something that, having invested direct checks into companies versus if your check is not big enough, sometimes you cannot get information rights as an investor. What that means is you will have no idea whether this company is succeeding or failing. And there are some founders that are fantastic at sharing updates, investor updates, but then sometimes they're just busy. It doesn't necessarily mean they're a bad founder, but it's very inconsistent in terms of what kind of information that you're going to get. And it's very hard to act on. Whereas I found from a syndicate perspective, and perhaps it's just because the SPV leads that I've worked with have been people like Annie and Kelly, where they're really amazing at checking in with the founders and extracting the information needed to be helpful as an angel investor. But I think that's one huge benefit of joining an SPV as an angel investor, is that you're getting so much more information. The flow of information is incredible versus doing a direct investment into a company where your check might not be a big ownership percentage of the company. So the founder is not going to have the time, and it doesn't make sense from an ROI perspective for them to invest in sending you a lot of updates and asking you specific questions on what their needs are. So I find it really helpful to be impactful for the company and also understand how your money is performing if you are thinking about it from a return perspective. Last question for you all. This is so helpful. And these angel investors are truly that. They're angels. Not all angels are angels. Some are the opposite. So they're right in that you really want to, as a founder, you want to vet your angels. And as an angel investor, I loved, Rochelle, how you talked about be honest with yourself in whether or not this is right for you, and be prepared that that money is probably going to be zero. Like, hopefully it's not, because the upside for all of these companies is also massive, but it is really high risk. And that's why there's those regulations in place. But where can we find you all? And for angels who want to work with you, as well as founders. I'll start with you, Kelly.
Great. You can find me on my website, goldenhourventures.co. I'll buy that .com after my first exit. Feel free to email me also, kellyrena@goldenhourventures.co. I'd be happy to send you that diligence questionnaire, and Golden Hour Ventures on Instagram.
Amazing. Annie.
Echo to Kelly. So dreamventures.co, buy that .com after my first exit. And then Annie at dreamventures.co. And I would love to connect with anybody on this call. And it's my favorite topic in the world.
Yeah, I love it. I have a .com. Wow. The syndicateangels.com. I already see, because I get alerts when people fill out the form. So I saw on the call someone already filled out the form. So
Yay.
I'll definitely take a look. But my contact me is on there, as well as any founder who's interested in learning more about the syndicate or network of angels, or any angel investors who are interested in joining or just learning more about angel investing. The syndicate
If you
angels.
all want to use Sidecar, again, huge fan from an investor perspective. They've just made it super, super easy. I am the last person to be able to figure this kind of stuff out when it comes to tech. You can ask Annie. It's like, I'm going to email her 10 times and be like, where do I need to send this again? What's going on? What do I need to sign? And they made it incredibly simple. So I'm a huge fan of theirs. And as a founder, it's a wonderful platform to be able to use. So definitely go onto their site, fill out the information if you are interested. But thank you all for being here. Hopefully we've gotten some more angel investors in the world today. Thanks to Rochelle and Kelly and Annie. Really appreciate you. Bye, everyone.
For having us.
Thank you. Bye.